Welcome all to this important and rather forward-thinking webinar discussing what next for landlords and tenants after the lockdown, which we're all longing for now. Dorsey is a long-standing NDCC partner member, and they have vast experience in this topic. Melissa Moyle, a partner at Dorsey, and her colleague Joseph Lewin, associate, will share their experience and valuable input to all of you. So, Melissa and Joseph, the floor is yours.
Good morning, and thank you for having us here to talk about the practical aspects of the lockdown and how it's affected properties in the UK. I'll just give a brief introduction before handing you over to Joseph to talk about government measures. But obviously, we've all watched as COVID spread across the world from the start of this year, at the end of last year. And we had some experience in it ourselves, and that had affected our offices in China, in Shanghai and Beijing before moving through to Hong Kong. Obviously, we watched in Europe as it moved through Italy, France, Spain, different countries, and eventually obviously impacted on the UK. We had a very strange situation in the UK where there was no formal government announcement to close certain premises, although people were actively discouraged from going to them, talking mainly about pubs, restaurants, hotels, certain retails. And obviously the lockdown was then announced by Boris Johnson on the 23rd of March. Now, many offices had already closed. For example, my last day was the 17th of March. Many people were already working from home. But we've been left with some grey areas, for example, construction, what was essential retail. We had a situation with Mike Ashley and Sports Direct, who tried to say, because everybody was doing exercise, that was essential retail, although they eventually closed down. But it's unprecedented times, and the UK government has very much taken a different approach in what is a looming recession, unfortunately, than it did in the credit crunch of 2008, 2009. And there seems to be a willingness to help businesses, to try to get businesses to see themselves through this from both the landlord and tenant perspectives. So I'll hand you over to Joseph so he can talk initially about the measures brought in by the government.
Thank you, Melissa. I'm Joseph Lewin. I'm a senior associate at Dorsey and Whitney in its London trial team. I'm going to speak about the measures the government's instituted in response to the COVID crisis, insofar as they impact on landlords and tenants in the commercial sector in England and Wales. Now, similar legislation has been passed that relates to Scotland and Northern Ireland. I'm not going to cover that here. We're going to concentrate on England in particular. Now, it's fair to say COVID's made an unprecedented impact, and the impact falls particularly heavily on the property and real estate sectors. The government's put in place wide-ranging measures, and central to all of these measures, first and most importantly, have been lockdown restrictions that have been put in place. Now, the key legislation for that is the health protection regulations that came into effect earlier this year, and which have now been amended 3 times, including most recently on Monday. And these regulations make an offence for a person to be outside their home without reasonable excuse and have closed most non-essential businesses. Now, this has had a huge and very direct impact on the rental sector. In particular, lockdowns prevented the physical occupation and use of many premises. It's meant widespread closures of business premises and offices, and all of this has led to very serious cash flow difficulties that many tenants are struggling with, and it's meant that many tenants are finding themselves unable to fulfil basic rent obligations, such as paying rent, which have nonetheless remained fixed. And this has led to them being in risk of breaching lease covenants. Now, from an early stage, there's been awareness that the government would need to step in and legislate to protect landlords and tenants who are suffering from the commercial effect of the virus and the lockdown. And the key bit of legislation has been the Coronavirus Act 2020 that came into force on the 26th of March. And that's introduced various measures aimed to protect landlords and tenants from the effects of the lockdown in particular. The majority of provisions in the Act are going to be enforced for 6 months only, but there's a possibility of further extensions. Now, for our purposes, the primary effect of the Act is to assist tenants. Typically for a business tenancy, if rent isn't paid, then a landlord has a right to re-enter and take possession of the premises, and that's known as forfeiture. Forfeiting a lease terminates the lease and enables a landlord to regain possession. Now, the Coronavirus Act 2020 substantially limits the ability of landlords to forfeit and regain possession. And that's done in tandem with another measure, which is the new Practice Direction 51Z, which is part of the civil procedure rules that govern litigation in the English courts. And that came into effect at more or less the same time as the Coronavirus Act, and it substantially amends the procedure for forfeiture proceedings. And the effect of the two acting together is to place an effective moratorium on forfeiture proceedings. For business tenancies, the key provision is Section 82 of the Coronavirus Act, and that suspends the landlord's right to forfeit for non-payment of rent for the relevant period. And that relevant period is 26th of March until the 30th of June, so end of this month, but there's an option to extend. Now, during the relevant period, any right of re-entry or forfeiture that's reserved in the lease for non-payment of rent can't be enforced, either by legal action or otherwise. Any possession order that a court makes mustn't require a tenant to give up possession before the end of the relevant period, and any order that's already been made is effectively treated as extended. And where proceedings have already been issued, those proceedings are stayed for 90 days. So the measures are clear: no forfeiture or orders for possession during the relevant period. These measures have already been through the court, and just at the end of last month, a judgment was handed down showing the court is willing to uphold these provisions, whether landlords like it or not. So the measures are largely in favour of tenants, but they're not solely in favour of tenants. There's a very important additional right for landlords, which is that any conduct by a landlord in the intervening time isn't regarded as waiving a right to forfeit and take possession for non-payment of rent, unless there's an express waiver in writing. That's very important, because anyone who's part of the anyone who is a landlord or has worked in these sort of circumstances knows that if a tenant doesn't pay rent, one of the most pressing issues is to make sure you don't lose your right to forfeit and regain possession by taking any action that affirms a lease. Now, since the introduction of the Act, there have been a few exceptions that have been brought in to these amendments, and these relate really to circumstances that are quite easy to understand, that probably would have been included in the original legislation if it hadn't been drafted in such a hurry. And these include proceedings to evict trespassers and attempts to re-enter property in situations where there's a real need to do so, such as, for example, a gas leak. But overall, there's no right of re-entry or forfeiture for non-payment until 30th of June 2020. But at the end of that period, the right will be restored immediately. Now, it's important to note that this doesn't completely hamstring a landlord. Crucially, rent deposits remain available, and there's nothing to stop a landlord from suing for a debt for the unpaid rent or for pursuing guarantors. The Act itself didn't prevent service of a statutory demand for winding up to put a debtor into liquidation, nor did it prevent commercial rent arrears claims. But since then, there have been new measures that do limit those, and we'll talk about those shortly in very brief detail. And crucially, it also doesn't prevent enforcing rights in respect of breaches for other matters other than non-payment of rent. But for the time being, tenants are protected from forfeiture. However, any amounts due under leases do continue to accrue and remain the tenant's liability. So rent is still stacking up. And Melissa, I'm sure, is going to speak about that shortly when she talks about the commercial issues that are going to face landlords and tenants when we come out of this crisis. Now, since the Coronavirus Act, there have been some further measures put in place that protect debtors, including tenants. So one of these is the taking control of goods regulations. These impose additional restrictions on enforcement actions by landlords, and that includes an increase for the minimum unpaid rent that must be outstanding before a commercial rent arrears claim can be made. Commercial rent arrears is what used to be called distress, and that's a right for a landlord to go onto property and seize goods that are kept on the property to satisfy an existing debt. Typically, that requires at least 7 days unpaid rent, but the new regulations have raised that to 90 days unpaid rent, so a significant increase in the limit. And the other important measure is the Corporate Insolvency and Governance Bill, which has recently been published. And the bill aims to prevent aggressive rent collection. It aims to restrict the use of winding up orders in particular. And that winding up orders are where a creditor puts a corporate debtor into insolvency for the non-payment of debt. Now, the bill's still in its early stages, but if it's passed in its current form, it's going to have a very, very significant effect. It proposes that no petition for the winding up of a company can be presented during the specified time period, which at the moment is from the 27th of April, based on a statutory demand that is served between the 1st of March and the later of the 30th of June, or 1 month after the measures actually come into force. And even where this restriction doesn't apply, i.e. where the statutory demand was presented before or after the specified period, creditors still can't present winding up petitions on the ground of an inability to pay debt, unless the creditor has reasonable grounds for believing that the coronavirus has not had a financial effect on the company, or that the debt issues would have arisen anyway on their own. So that bill's passed Commons yesterday, and it's going to the House of Lords today. So we would expect royal assent midway through this month, maybe later on in June. And by the way, that's only one of the effects of this bill if it's passed. It's also going to bring in fairly sweeping changes that will affect all of the commercial sector. But in summary, the government's already put in place measures that have very significant effect, which aim to protect tenants in particular suffering from the economic effects of the crisis and the lockdown. More of these are on the way. For the time being, there's an effective moratorium on forfeiture and re-entry to obtain possession. There's an increased time limit, an increased limit for the amount of rent that must be owed before commercial rent arrears claims can be started. And coming down the tracks are measures to restrict the circumstances in which a winding up order can be commenced. However, other routes to enforcement do remain open to landlords, including claims to recover debts, just suing for debt, drawing down the rent deposits, and enforcement of other aspects of the lease. Now, I'm now going to hand you over to Melissa, who's going to talk you through the current issues that we are seeing in the landlord and tenancy sector.
Okay, thanks, Joseph. So I'm going to look at it from both the tenant and landlord perspective going forward. So as Joseph has said, the government measures are obviously relatively short term, but there is still some time for tenants and landlords to consider what actions they need to take. But just to be aware that, you know, the legislation is for a temporary period and that decisions will have to be made at the end of it. So what are the options for the landlord and tenant where there's been non-payment of rent and other lease breaches? As Joseph said, there was no rent suspension provisions in the legislation, so that rent is still payable. And any interest that is due, and that's usually in the lease provisions, will also be payable, and that is generally provided for in the lease. And one thing to bear in mind is that in most modern leases, interest is also reserved as a rent, which is payable under the lease. So it's just something to bear in mind that if you have paid any payments under the lease late and have not paid that interest, that may have an impact on any future actions under the lease. For example, if you want to break the lease, some leases might provide that one of the conditions is that all rents have been paid. And there has been relatively recent case law that shows if there's been any interest outstanding that the break is invalid and the tenant has had to stay in the property. So it's just things like that that should be borne in mind. If it's not paid, you know, it could give the landlord another ground to forfeit the lease. There's also other considerations in relation, for example, in retail leases. They often have keep open covenants. They're very difficult to prove in English law, actually. The courts tend to not go against the tenants in this situation, and certainly in the current pandemic situation, they're very reluctant to do that because the tenant obviously has to comply with statutory and government regulations, which was a complete shutdown unless they were classed as essential. The same with repair. Virtually impossible probably for a tenant to carry out repair works on anything that isn't an emergency. For example, Joseph referred to gas leaks, or maybe if there's a leaking roof. You know, these are works that may have to wait until the lockdown restrictions are relaxed more. For a landlord as well, if it decides that it wants to go for the forfeiture route, it might not always be the best option. So is an empty property going to be attractive for a new tenant that's looking to come in? I'm looking at things here, especially high streets, shopping centres, retail parks. They don't look great if you're trying to get a new tenant in, if they think they're not going to get an awful lot of footfall coming past the property. The tenants may be paying some of the costs, so maybe they're not paying the big annual rent, which is the largest cost on their books maybe, but they may be paying rates. Now I know business rates have been suspended for this year, but also service charges, insurance rents, utility bills. So there may be some advantages to the landlord to keep the tenant in situ, certainly for the time being. What's the likelihood of getting a new tenant in? Again, that will depend on the type of property. You know, retail was already struggling, so that would be the high street, retail parks. It may not be the market that people want to move into. Even offices may struggle after this. There are some markets that will do very well. So maybe warehouses, you look at the online retailers like Amazon, who are looking to take new spaces all the time. So if you have that kind of property in your stock, that's probably what you're looking to market at the minute. It's very difficult to know what the market's going to be like in the future, what the demand for space is going to be. As I've said, retail was already in difficulties even before the pandemic, but this is undoubtedly going to be impacted even further. Office space, there had been quite a demand for that. London certainly didn't have a lot of spare office space at the time, but will that change going forward? I mean, working from home has worked really well for a lot of businesses, and they've been able to operate fairly efficiently and effectively. Probably looking at their staff as well. Have they worked better on a streamlined staffing basis if they've furloughed their staff and taken advantage of the government scheme there? So there's lots of things for businesses to look at going forward. What we have found on the ground is that a lot of landlords and tenants are trying to work together, trying to come to some sort of arrangement. So as Joseph mentioned, rent concessions were not part of the legislation. So anything that has come into effect has had to be agreed between landlords and tenants. So we've seen a lot of side letters for monthly rent payments instead of quarterly ones. Maybe both parties taking a hit and carrying some of the financial burden. So a rent holiday, you know, just to reflect the current situation, maybe given a temporary rent free for a specified period, or a longer rent free. But rather than a side letter, you actually negotiate a variation of your lease. So you might have a rent free for, say, a 3-6 month period, but you will pay a higher rent than you would have been paying, say, from the 1st of January going forward. So it's just to help cash flow and to make sure that tenants can stay solvent. And that might also be an opportunity for both landlord and tenant to re-gear their leases. So just to look at their financial commitments going forward. You don't even have to increase the rent. You may have an earlier rent review. There's lots of options open to both parties, especially if there is an uptick in the economy next year and it's just a temporary cash flow situation. So then moving on to variations of leases and contracts. So a lot of contracts may be in place where there is a commitment to taking on a lease or some kind of property interest. So first question is, what do? Do you still want that property? Is there any way out of it? Most contracts should be fairly watertight. The first thing to do is review the contract, see if there are any termination rights. Generally, in agreement for leases, there aren't any apart from insolvency, breach of the agreement itself. You may be able to try and hang something on the breach, but I think it would be difficult in this situation. Force majeure, there is generally no force majeure clause in agreements for lease. I certainly haven't come across very many. That may be something that will be looked at in the future, but we just need to keep an eye on that. There is another argument for frustration. Now that is very much Joseph's area, so I'm not going to stray into that because you're looking at litigation if you're going to prove that. But it is a very, very high bar. There was actually a fairly recent case in relation to Brexit. Somebody had taken a lease in Canary Wharf and they tried to argue that the lease itself had been frustrated, but that was thrown out by the courts. But this is a different situation. But again, just to note that the bar for proving that is extremely high. Just to look at any other get out clauses, and to be aware that there is the risk that you'll be sued for breach of contract. The landlord obviously will need to prove loss, but again, it depends on each contract and the individual provisions in there. We have situations as well where we have people on site. This moves on to the next point on construction and fit out works, but also with the contracts. And construction has obviously been a very grey area. It was one of the work streams that were allowed to continue by the government, but it's had quite a mixed reaction on the field. So some construction sites kept working, and you may think they're not very essential. I mean, there were offices, for example, on Bishopsgate, the work kept continuing, housing sites, but other construction companies pulled out and said they couldn't keep their staff safe and they weren't willing to put them at risk, etc. So again, you need to look at the contracts. Construction contracts tend to have force majeure clauses in them and provisions for extensions of time. So that's what we have been seeing a lot on the ground, that the contractors have been relying on this. Again, it's a really good idea if you have a good relationship with the landlord, or if you're the tenant, if you have a good relationship with your tenant, to open negotiations, try and reach some form of agreement. We've been able to vary contracts, both agreement for leases and construction contracts, by variation agreements and side agreements, which, you know, take the circumstances into consideration, allow them to extend the time period that the works are going to be carried out. And it's very much a collaborative approach. Now, that's not possible with every landlord and tenant. You know, you're not always going to have that great relationship. But it's definitely, if you can open negotiations as early as possible, it's a really good idea. If you have been carrying out works on your property, you should be aware that the landlord's consent, so licenses to alter or licenses for carrying out works, whatever they're called, they usually have time stipulations for carrying out those works. So you need to be wary of that. Very easy to extend, again, a simple side letter or side agreement. The licenses themselves, unless you're carrying out extensive works, are generally quite short. But it's just things like that that you need to be aware of. Also, of any long stop dates and agreements. So that usually gives either party a right to terminate the contract. Again, it will depend on the contract provisions. Generally, there will be a notice period when you serve that notice. So like the market is generally 20 working days. It gives the other party the time to remedy the breach in the contract, rather than just have a dead date where everything falls away, especially if it's just a minor part of the works that needs to be completed. And that works for both the landlords and the tenants. One point that I didn't put on this, and it's not really property, but I thought I should mention it anyway, is obviously insurance. Now, the property insurance is generally covered by the landlord and contractors, depending if it's works that are being carried out. But business interruption insurance is also a good policy to look at. As we've discovered, most people are not covered by the insurance policies they have in place. And again, it will depend very much on the policy and the wording, but there has been recent press reports. I'm not sure how accurate they are. I guess we'll have to wait and see what happens. But I think it was Raymond Blanc who did have some kind of pandemic cover, or believed that he did. But I know the insurance companies were trying to get out of it. So maybe that's just something to watch again in the future, to consider what you need to do for your business going forward. So the impact on current negotiations. So we've seen this as well. Parties may just pull out of deals. They just might say, no, not for me. I'm coming back in 12 months, or actually we've decided we're not going to do this anymore. Parties may try to change the terms that have already been agreed. Heads of terms are generally not legally binding, but of course that will depend on the drafting and construction of the document. You know, business needs change, deals put on hold. And obviously while there's a downside for lots of people, there are obviously opportunities for buyers and investors. So if you are what would be termed cash rich, there may be some good deals on the market. A lot of these will obviously be off market, and it's always good to have a word to the friendly surveyor who always seems to be in the know. So Joseph, the next slide, please. So what about going forward? So commercial considerations for both landlords and tenants. One of the big ones is service charges. So again, you should look very carefully at the provisions in the leases, because who's going to pay for the new measures in the common areas? For example, the cleaning, more maintenance, more regular checks on air conditioning, airflow in premises, the preparation for social distancing, the additional sanitizers. And what if the tenants don't all return? The tenant's paying for a service they're not receiving. The landlord, will they make up the shortfall, or will the tenant still have to pay? So again, very much going back to the lease, looking at those provisions, seeing what they're saying. If you're resuming fit out works or any works at the property, you need to ensure that you are compliant, both landlord and tenant, and with government regulations, and that you have worked as best as you can to have social distancing, clean areas for people to work in. Break dates and leases. So what are you thinking about doing with your property? Do you have a break date coming up? Do you want to vacate the property? Do you want to use it as a negotiating tool so you can instigate discussions with your landlord, get a better deal, smaller space, different building? Rent review may be coming up. A lot of leases, certainly modern leases, tend to be a 10-year lease with a 5-year break, and the rent review is due on the 5-year date of the lease. So, you know, you could use that as a negotiation tool. But the one thing to be careful of is a break notice can't be withdrawn. So the break notice, that is it. The lease will terminate. So if you do come to any new arrangements, you do need to have that in place before that break date. Just something to bear in mind. And then also business needs may have changed. So do you want the space? Do you not want it now, but might need it again in the future? You might look at the lease provisions and see if you can assign the lease to a third party. Maybe underlet the space, underlet part. You can't always underlet part for a lot of leases, but if you have a significant space, you usually are able to do that. Or do you want to enter into a negotiation with the landlord to surrender the lease? Now, a lot of landlords probably are not willing to do that, but some larger landlords, maybe institutional landlords, will have deeper pockets, may have plans for the building that you're in. It's always worth having a conversation if you think it's something that may have legs. I mean, all they have to do is say no, but you can always open those avenues for discussion. And then, sorry, I'm probably going over my time, but practical considerations. Both apply to landlord and tenants. So you need to ensure that you've got all the social distancing measures in place, sanitizers, screen protectors, management of traffic, of people, limiting touch points, lift area management, lifts, limiting the number of people in lifts. For example, I know our building in Bishopsgate, when we go back, it'll be 2 people per lift and we all have to face the wall. So it's back to back. So measures like that, I mean, it's all fairly commonsensical, but I think it's very clear that from the guidelines that we do all need to have business plans in place, and the property obviously is a big contact area for people. Regular cleaning, re-engaging the building systems to make sure that everything is flushed through. Legionnaires, questionnaires have already been circulating, just to make sure that everything is up and running for when tenants do re-enter the building and for when landlords want to have everything fully operational. Health and safety requirements, and then the requirements for employees as well, but they're more for the businesses, you know, such as thermometers, masks, and sanitizers. So that was very much a whistle stop tour through what has happened in the last couple of months, what could happen. I mean, we all need to keep an eye on what's going to happen in the future, because the government seems to very much have a back to business policy, certainly in its mind for going forward. We're hoping that there will be more collaboration between landlord and tenants. Certainly the government intervention, it's not just limited to the UK. Obviously, we've seen it with our real estate practices in the US as well, very much governed by state to state. But the idea is that people will work more together in the future. Hopefully, it's not to say that leases won't be forfeited and that both tenants and landlords may go to the wall. But certainly it has a very different feeling to the last recession in 2008, 2009. So if anybody has any questions.
Hello, there's, sorry, any questions at all, Melissa asking? I know she and Joseph have been very, very thorough here, fully aware of that, but any questions at all we can ask the panelists. Now is the chance to get a free advice from a lawyer. That is worth something, guys and girls. Come on.
Myself. Hello, I wanted to ask about the current moratorium that expires on the 30th of June, which makes the March rent effectively unenforceable by any way other than going via the judgment route. What's your opinion on whether that's likely to be extended to include the June quarter?
So currently the moratorium is due to end at the end of June on the 30th. It's actually quite hard to tell at the moment. I think if you'd asked me a few weeks ago, I would have said, yes, I anticipate it's going to be extended, but the government has been giving fairly clear indications that it's hoping that things will get back to normal and it will start to withdraw the measures. So in answer to your question, I wouldn't be surprised if it's extended into the next quarter, but I'd be quite surprised if it's extended into the quarter after that. There's an option for 2 extensions. In terms of where it leaves landlord, it is important to stress that there are still approaches available to landlords. So as I mentioned, rent deposits do remain available, and there is still an option to sue the tenant personally for debt. Those haven't gone away. It's only the forfeiture and re-entry moratorium that has been put in place.
And do you think, and is that also true for the winding up petitions and statutory demands?
So those have a different period that they relate to. I think we're going to see that coming into play in quite a significant way in the next few months. I mean, we're going to be seeing a lot of businesses going under, not just in the real estate sector. And this is essentially going to prevent creditors from exercising what was previously considered the nuclear option of commencing winding up proceedings. You can still threaten them, and you can still follow up other insolvency proceedings if you have a right to do so. But the statutory demand that was at the heart of any threatening debt recovery strategy will be off the table, really for the near future, because in almost all of these cases, it's going to be possible for the debtor to point to the effects of the coronavirus.
Yes. Thank you very much.
So I see there's been a question about credit payments. What about the credit payments that the landlords have to pay to banks or investors? For example, credit debts for firms that own shopping centres, are they delayed? Well, a lot of that will obviously be dictated by the finance documentation. I take it you're talking about loans to landlords. And that is probably why, it's related to the previous question actually, why the government will only take so much action, because it also needs to look after the landlords and the tenants. Because a lot of landlords will be highly leveraged, will have debts to pay back themselves. So the government doesn't want them to go under either. I'm not a finance lawyer, but I would suspect that if they have debts to repay, then that will be dictated by the finance documents that they have in place. I hope that answers the question, that I've got that right. Yes, okay, great, thanks.
Any other questions for the panelists here? Okay. Do you have anything else to add, Melissa or Joseph?
Not for me. Thank you very much for allowing us to come and talk to you. It's quite good. I think it's an interesting space, and you know, a lot has changed in the last 3 months. So who knows where we'll be in another 3 months from now.
I wish we could all look into the glass bulb and be wizards, yeah. But I don't think that will happen, unfortunately. Anyway, thank you so much, Melissa and Joseph, and thank you so much, Dorsey, to let so prominent lawyers to take part of this webinar. Very interesting. Thank you so much. Thank you to all the attendees and to my colleagues in DK UK, FDCC, and of course to Nyosha, who has been the technical manager behind this webinar. Thank you so much, everyone, and have a great day.
Great. Thank you.
Thank you.